Fantastic. Well, guys, we've spoken about the new NHR, how to qualify, what a setup looks like, also the ridiculously good tax benefits that it has. What we haven't yet spoken about is this concept of being a freelancer in Portugal. So I think, Manuel, Enrique, would be very useful if you could shed some light about what a freelancer setup is, who is it for, and how it works.
A freelancer is someone that works for himself. So you are not an employee. You are not under an employment contract with a specific company. You work for yourself and you provide services to maybe one company, maybe you have multiple clients. They can be all around the world. Maybe you already have that activity set up somewhere else and you're just looking to move to Portugal. If your plan is to move to Portugal, you should enroll yourself as a freelancer here and start providing services from here. Start passing your invoices for all of your clients, no matter if they are Portuguese or located outside of Portugal. So that's really what being a freelancer is. It's to work for yourself without actually having a company structure separated from you. So you just work under your own name and you invoice as such.
Great, that's pretty clear. But how is being a freelancer tax efficient, or can it be tax efficient?
The very big advantage is that you can reduce your taxable income. So employees can only deduct the social security that they pay. The reason is that it's presumpted that their employer is going to be supporting most of the expenses related to their work. So maybe they are going to be buying their computer, they are going to be buying their working materials. Freelancers, that's not the case. You will mostly be supporting your own expenses. This allows you to have two ways of deducting expenses and reducing your tax base. The first one is organized accounting to determine your taxable income. So that would be revenue minus expenses. You take all of the money that you invoice, you'll take all of the expenses that you have related to the activity. The difference would be the profit and you would be taxed on that. That's one option. But a very strong option, and I think that's really characteristic of Portugal, it's called the simplified regime of accounting. In most professions these days, the professions that are intellectual, where you live out of your own work and you don't actually have that many expenses, you're not buying too much things, you wouldn't have many expenses to deduct in this case. So the simplified regime allows you to have a fixed percentage of your gross income that is your taxable income, no matter how much expenses you actually have. The percentage is usually 75%, and then you get an incentive for starting the activity. In the first year, this 75% get reduced by 50%. So it turns out that 37.5%. Then on the second year, it gets reduced from 75 by 25%. It goes down to 56. Then on the third year, it would become 75%, and it would keep being 75% from then on. So that means that in your first year, if you earn 100K, only 37K is taxable. It's true that this is subject to a declaration of 15% of expenses still to get these best percentages, but even if you don't do it, you'll get just slightly higher rates.
So only 37% of that 100K is subject to tax, and then you apply the national income tax rate to that 37%. So in effect, your tax rate is in the single digits.
Exactly. Your effective tax rate is very low when you start, and even then it's going to be much lower than if you are just an employee earning exactly the same amount, but you couldn't take all of these expenses from your taxable income. And also, you can still have access to additional benefits. For example, if you are under 35, you'll get an exemption, and that exemption, as it's kept on 28K, if your taxable income is very low, you may end up paying zero or very close to zero.
This is the U35 Jovem regime.
Exactly. Yeah, an incentive for young people that works for both employees or self-employed. It's an exemption of 100% of your income in the first year, and then 75% in the second to fourth. Then it starts dropping, but it lasts for 10 years.
Wow. So effective tax rate on a 100,000 euro income would be?
Yeah, so if you're a freelancer, it's just around 3%, 3-something%. So that's
in year one.
Yes, the India one.
So we've spoken about the NHR 2.0. We've spoken about the IRS Jovem regime as well. Which regime is better and for who?
That's a very good question because it really depends on your specific situations. So the path that I would choose to go is to see, would I be able to qualify for the NHR? Am I working in an area that's on the list? If I am, I would probably be very inclined to do it because it lasts 10 years and the advantages on foreign income, just the exemptions are just very strong. And 20% is quite a low tax rate. And if you really earn a lot of money, the 20% will be very, will sound very insignificant as compared to the alternatives. If maybe you're young, you're not making as much money yet, or you have an activity that doesn't qualify you for the NHR, the under 35 regime is still very strong. If you're under around 70k a year in the first year with the IRS Jovem, you will almost for surely pay zero taxes. So that's very appealing as well. Some possibility would be to combine the two. So maybe you come here, you'll still be building up your income streams, etc., and you take advantage of these very powerful incentives for the first years, and then you would create a company that qualifies for the NHR. You'll work for that company and make the application then. So that's also so that's really why it really depends on your personal circumstances.
One of the things we prioritize at Touchdown is making sure that our customers are set up in the most tax efficient way possible. I think one thing we yet haven't touched upon is actually, if you do move to Portugal and you take advantage of the NHR or the IRS Jovem scheme, do you have to still pay taxes back at home in the US or the UK?
I'm going to talk about countries that are not in the US first, and then talk about the specificities that come for US citizens. So in most countries, you will stop being a resident there. So you will no longer be liable for worldwide taxation there. But if you have income source there, that could be a tie that makes your income taxable there. You will also be taxable in Portugal as a Portuguese tax resident. So you will want to most likely declare in both countries. And then there are double tax treaties that will take care of making sure that you only pay your taxes in one of those countries. It will depend on the specific type of income. If the country where you will pay taxes in is Portugal as your country of residency, or the other country where you came from, which is your country of source. There is even a possibility that you have income sourced in a country that's not your country of origin, and that may be at stake too. But we'll make sure to that we understand your situation and to help you figure out exactly where you are going to declare and where you are going to pay your taxes. Then I will go into the US is a very specific topic because Portugal has a double tax treaty with the US, but the US, like in all of the double tax treaties, they have this exclusion clause, which means that they can tax their citizens or green card holders for their income, no matter if they are a resident in the US. So even if you stop being a resident in the US and you move to Portugal, you may still be liable for US taxation. The way they do prevent this double taxation is by having some internal rules. Those are the foreign earned income exemption and the foreign tax credit. But we can definitely make sure that you will not be taxed in both countries. But the situation is a little bit more complex than it is with other countries.